Hi there, welcome to another live webinar with us from Phillip Nova. And today we'll be having yet another Trading Central webinar. We'll be learning more about finding trading opportunities amid rising interest rates. And who do we have in the studio? It's our dear friend Ming Lam from Trading Central. He's the head of research for Asia, and he has over 10 years of he's had over 10 years in the financial services industry, engaged in translation and research operations. And in Trading Central, Ming specializes in technical analysis for stocks, foreign exchange, commodity markets, you name it, he's done it. And his goal is to provide customers with independent and superior market insights. But before we jump to Ming Lam, we have Dominica from Trading Central to walk us through the Phillip MT5 platform and how you can use Trading Central's trading tools to support your trading. Dominica, just before I hand the reins over to you, I'm just going to launch a quick poll to see if members of the audience can hear me loud and clear. All right, great. Thank you so much for verifying that you can hear me loud and clear. Dominica, if you're all set to go, I'm going to hand the reins to you. You can walk us through the platform now. Dominica?
Hello, good afternoon. My name is
Hi.
Dominica. Yes, hi, can you hear me well?
Yes, loud and clear, Dominica. All right, over to you.
Thank you. Thank you. So, yes, as we mentioned, I'm Dominica from Trading Central. I'm Client Success Manager based in Cyprus. And I'm here today just to present where you can find Trading Central tools on Phillip Nova MT5 platform. As you can see on my screen, this is the MT5 platform that you are using for trading. Now, you can get a set of our tools from Phillip Nova website, where you go to the tab of platforms, and then you choose Phillip MetaTrader 5 suite. When you scroll down, you have the section regarding Trading Central, and if you click on this button, you're going to download our package that includes Trading Central indicators and the Market Pass plugin. So once you download the MT5 platform, then you download the set of indicators from Trading Central. You will find them in the navigator window. Then in the indicators section, you will have a clear Trading Central section of the indicators. So the most important one and recommended one is the analyst view indicator that you can see overlay on the chart. This indicator shows you the Trading Central preference, which in this particular case for Euro USD pair is rise. And you can see the support and resistance lines and the pivot point. So you can use these levels in your trading as a take profit and probably stop loss, the pivot point as a stop loss. You can also find the explanation of what you see in the levels on the bottom in yellow. And you can see also when this scenario was released. So we do the updates on the Forex pairs on average every 2 hours. And of course, you can change also according to your time frame on whatever you are trading. So if you change the time frame of the chart, the analysis will also change. So you can trade depending if you are preferring, intraday, short or long-term trading. So that's it from me today. I hope you enjoyed the webinar by Ming, and of course the tools available for you from Trading Central. Thank you.
All right, thank you so much, Dominica. And you heard it there from Dominica herself. Yes, the tools are very useful for your trading. So do check them out. Alright, without further ado, let's go to our market expert, Ming Lam, who's been ready to give you the insights in the markets and tell you what's happening right there. Ming Lam, are you all set to go?
Hi, thank you, Sui, thank you. And well, welcome ladies and gentlemen and friends of Phillip and Trading Central. Very nice to see you again. And I did a webinar. Let me see, let me just get the pointer. Okay, laser one. Yeah, I did one webinar back in August. It was in English, and then I did another one in Chinese in September. And yes, I also speak Putonghua and Mandarin, but I know that my Chinese speaking is not very good. And I thank you so many encouragement from audience on the YouTube channel, Philip Lover's channel, and yeah, let's see. And I will turn out more Chinese webinar maybe. Okay, for today I have prepared some very interesting information for you. Well, rest assured, it will not take you a very long time. I estimate it would just take you about 30 minutes. Okay, let's chat for 30 minutes, and I give you the most important insight I have noticed in the market. And here we go. And most of the assets we are talking today, just like US stocks and just like forest pair, just like gold, it could be found on the Philip Lover MT5 platform very easily. Okay, and well, this is my style, as you know. Conclusion. And well, in August we talked about US dollar rally, and at that time we discussed that the US dollar rally could lose steam. Okay, and audience members were encouraged not to be too bearish on stocks. Okay, this is back in the August. Okay, and then in September, the Chinese one, and at that time we told the audience that bull market can start quietly, and we should take out stocks in good technical form. Okay, so at this very interesting time, when almost all of us are very bearish on the stock market, and I think I need to give you some push or some encouragement, right? And so how about today? This webinar, I can tell you, we found that inflation and economy are slowing. I mean, both inflation and economy are slowing, particularly in the US. And as you know, the Federal Reserve, the US Central Bank, has already shown that they are willing to slow down the pace of rate hikes, right? Although many of those Fed officials are still very hawkish when they give interviews, right? But on paper, on statement, they have already shown this we call it pivot point, okay? And I will show you later. And also, I will show you later also, US Treasury yields and US dollar, they are losing steam, okay? And also, extreme bearish sentiment is easing. It is good. It is a good sign. And we are seeing some good, some stocks with good technical configuration are rebounding. Okay, I will share with you which sectors and what kind of stocks are rebounding. And of course, well, market shaker. If you are following our webinars for several months, you know what I'm talking about, what I will talk about. Okay, so okay, let's go. So first of all, we talk about the major banks' interest rates. As you can see, I can say it is a little bit, I can use the word crazy for the US. Just for, do you know that the US Central Bank has just raised interest rates by 75 basis points for 4 consecutive times. That is boom, 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 4 times. Each time 75 basis points. For me, for those of us who are constantly monitoring the market, it is a little bit extraordinary. Now, US rate is 4%, back to the level in 2008, just before the worldwide financial crisis. Okay, it's 4% now. How will it go? Okay, but before we talk about how high will it go, I give you some magnitude, some impression that it starts at 0.25%. That is a quarter of 1%, and then boom, 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 boom. Now it is 4%. Think about it. 0.25% now to 4%. It is 16 or 17 fold. Okay, am I right? 16 or 17 times. It is extraordinary. And now, as far as we know, the market is expecting the Fed to max out the interest rate hike at 4.5 to 5%. That is 1 more percentage point from here. Okay, and you can see UK now is 3%, EU, European Union, 2%. Okay, Eurozone. Okay, and Japan is quite interesting. I can say they keep the interest rate at negative, still negative, when all the central banks around the world are increasing interest rates. Japan say, sorry, we are not in that camp. We keep our interest rate at negative. Remember, there is a negative sign, negative 0.1%. Okay, it is very interesting. And at the same time, I can tell you, Japan is also conducting yield curve control. You know that? YCC, yield curve control. They buy their treasury bonds, okay, to keep the 10-year treasury yield at 0.25% forever. Okay, so it's quite interesting, right? And okay, 4.5 to 5%. I think it is max. I agree with this. I agree with this expectation. You know what? I can, as I mentioned, interest rate in the US has increased 16 to 17 times, and if they keep this rapid rate, I think the Federal Reserve, those political leaders, will take the shoulders of the Federal Reserve and say, hey, you should not do that. This is enough. This is enough, right? And it will be a political issue. So I agree with this market expectation of 5% at max. Okay, so time will tell. And next, and this one, this is not what I say. This is what the Federal Reserve really stated on their minutes. Okay, a substantial majority of participants, it means the Federal Reserve officials, just that there is a slowing in the pace of increase in interest rates will likely soon be appropriate. It means some sign, it is a clear sign of pivot. Okay, pivot. As I mentioned many times, the investors, they don't need to see the Fed stops, or they don't need to see the Fed say we are stopping. When there is any signs, any hint like this, they know the central bank is stopping. Okay, pivoting. Why? There is a risk of instability in the financial system to reduce the risk. Okay, so what is the macroeconomic background when upon this the Fed status? They say they are going to slowing the pace of increase. Okay, I will take you for a look one by one. Okay, first of all, CPI, the inflation rate of US, it peaked at 9.1%. It should be June. Yeah, it should be June. And then you can see it is coming down. Yeah, June is 9.1, July smaller, and back in October, it is just 7.7 year-on-year, the inflation rate. Okay, this shows you that it supports the central banks, reducing the speed of rate hike. Okay, CPI, this is. How about next one? PPI, Producer Price Index. In fact, it peaked much earlier. This 11.7 should be in March this year. Okay. Yeah. And then it declined ever since. Yeah. June is also double digit, but stepping into July, August, blah, 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 until October, it is 8, decreasing. Okay. The price pressure on producer and consumer decreasing. And this one is the core personal consumption expenditure deflator. Wow, it's a long name. PCE, we call it PCE. In fact, this one is the Federal Reserve view this one more important than the CPI. And it is a take up for September. So for the CPI and the PPI, I just showed you they were for October. And now this PCE deflator is for September. And 2 days later, that is the 1st of December, there will be a new data piece for October. So we should watch closely, okay? And to see if the trend is down like the PPI and down like the CPI, and that will be good in that case. All right. Now, this one is also very important. ISM manufacturing PMI. The next data will be out also 2 days later. So the most current one is for October, 50.2. Do you know how to read this kind of data? The central line, 50, we call it the neutral one. That is neutral, okay? Above 50, it is called expansion, and below that, 50 is contraction. And it is quite clear. It is in a downtrend, and if you ask me, I would say it will surely break 50, okay? And back into 40 something in contraction mode, the Fed will have a very hard time increasing interest rate 75% point, right? And so watch out 2 days later, okay? And when it breaks 50, well, market sentiment, I mean the stock market sentiment will be higher, will be good, okay? So another one is a consumer sentiment index, University of Michigan. The lowest point was marked in June, this June. It's record low, okay? The lowest point for this survey. And we can see it tick up a bit, and but the overall trend seems to be still on the downside, okay? Consumer sentiment, all right? Now, this is a very interesting chart. I put up this chart for every webinar. This is a yield curve. I repeat, what does a yield curve mean? It means the 10-year Treasury yield US minus the 2-year. If it is negative, it means the 10-year yield, the yield on the Treasury bonds is much lower, smaller than the 2-year yield. Okay, and in that case, in this case, we have negative. It means that normally we are going to see a recession of some kind. Okay, as you can see now, the inversion, we call this yield curve inverted yield curve. Whenever it jumps below 0, it declines below 0. It is 78 basic points. Okay, compare back to the year 2000 when we had the dot-com bubble burst. Wow, it is huge. Okay, Will there be a recession? Okay, will there be a recession? You tell me. I hope not, but well, this is not what I hope will happen. And in case of a recession, do you think a central bank can insist on raising interest rate? Of course not. Now, following, I will show you some a stock index chart, and it will involve some technical analysis, TA, which is what I conduct every day in my work. And I give a warning in every webinar. So TA, technical analysis, does not predict the future. Okay, it is a lagging index. It lags the price. We have price, and then we have technical analysis. And then what is the use? We use it to identify patterns, okay, and to see if there will be signals or confirmation. And also, mind you, sometimes the signal could be false, okay? Sometimes signal will be good, okay? And you have to also you have to gather some experience on trading with TA. But my advice is, our advice is, do not just make your trade with technical analysis only. Okay, you have to gather also other information, particularly the market sentiment. Okay, particularly what is happening around the world. All right, so next one, I'm going to show you the 10-year yield, 10-year Treasury yield. We have broken below a rising trend line, and we have double top. Of course, we are on the downtrend. And also you can see, oh, sorry, not yet finished. Also, you can see the technical indicators. Well, for all these charts, I will show you two momentum indicators, MACD, RSI. Okay, the momentum indicators for 10-year Treasury yield is very bad. Okay, there is no upward momentum for you at the moment. But also, mind you, could you see that back in August, we confirmed something like a head and shoulder reverse configuration pattern. But at that time, it reversed back again on the upside. So this is why I emphasize that we cannot just trade on TA alone. Okay. At that time, there was a head and shoulder. Can you see that? Reverse. But it reversed again to the upside. And this time, would it also reverse back to the upside? Yes, there will be chance like this. But we also have to take into consideration of other market factors. Okay. Now, this is a Treasury yield. And next, another asset that trade most likely, most tick by tick with the Treasury yield is the US dollar. This is US dollar index. As you can know that for most part of the year, we have an uptrend. But currently, we can see that the 20-day moving average has crossed below the 50-day one here. And we have a downtrend on the upside. And of course, we are on the downside. And now, the US dollar index, we call DXY, DXY, is trading, well, close to the lower Bollinger Band. And the momentum indicators are also showing downward momentum. Not good. Okay, so at the moment, we are seeing US dollar weakening. Okay, and I have some also experts telling me that, hey, Ming, you should not be too pessimistic about the US dollar. It will rise again. Yes, I agree. But at this moment, for short-term trading, we know that it is on the downside. Whether it will swing back up to the upside, yeah, there is also possible. But for all the indicators, the technical indicators at the moment, we see that the chances it will get to the downside. Okay. Okay, so we go to the next one. Excuse me for a moment. All right. Now we have a very interesting piece of information, and this is the bearish sentiment index. Okay, maybe it is new to you. It is new to you. It is from the American Association of Individual Investors. Okay, the key level is 60%. It is the percentage of bearishness in the market. Okay, it is the percentage of bearishness in the market. 60%, as you can see, back in 2008, around the financial crisis, it jumped up to 70%. Okay, just not long ago, maybe in August, September, we also reached 60. Okay, but now it's back down to 40 or 30 something. Okay, this is interesting. And why? When we superimpose this index with the S&P 500, we see that every time it retreats from 60, the market will start a bullish up leg. Can you see that? Okay. So don't be too bearish, and we know that the extreme bearish sentiment seems to be a thing of the past. Okay. So let's see what the market is, how the market is doing. This is Dow Jones Industrial Average, US. All right. At one point back in September, October, it broke below the 30,000 points. Okay, very bearish at the moment. And then in the recent rebound, it jumped 19%. It jumped 19%, and it is now also, as you can see, the moving average, the 20-day moving average, this red line, and the 50-day moving average, the blue line, they are well positioned. They are well inclined to the upside. And also Dow Jones keep trading above both moving averages. Okay, so at this moment we are of the opinion that the rebound will continue. And also you can see that the momentum indicators are pointing to the upward momentum. We have not seen reducing in the momentum at the moment. Well, will there be some kind of a consolidation after 19% of rebound? Yes, there could be chance. But we see if you can manage to get up to the overhead resistance at this 35,400 points, it could get higher. Okay, 36,950 should be its record high. Okay, around its record high. Okay, mind this. And then how about the tech stock? Okay, last 100. Okay, at the highest point, record high, last 100 reached 16,700. Okay, it was back in November last year. So this down market has been in place for over a year already. All right, the magnitude is negative 38%. Negative 38%. Okay, and any sign you can see from these momentum indicators and also moving averages? Yes, moving average are getting level. Okay, it means the downtrend seems to be ending, and also the momentum indicators are good. I can say they are good, not very extreme, and they are holding up well. So we are of the opinion that this holding up position, this holding up pattern could last for a while. Okay. Now, I know that most of you will trade gold also. Okay, I know that a lot of Asian clients, Asian investors, they like gold. So gold seems to be trade in opposite direction with the US dollar. We can see that it has already broken up a bearish channel. Okay, for this bearish channel has been in place well for the most part of the year, and now recently it has just broken up. Okay, so 1700 should be our short-term key support. Okay, on the upside, we are looking past 1800, 1800. Okay, and also this rising 20-day moving average seems to be providing some support. Okay, now this is a spot gold, and I pick one currency pair for today's webinar. If you like to see more my analysis on forex, you let me know. Because we are going to have another webinar not far away in December. It should be December 15, something like that. Yeah, December 15. Let me know if you'd like me to show you more forex pairs. For British pound, it is good. And remember what happened back in September. Okay, Liz Truss, Prime Minister, she last for she was in a position of Prime Minister for how long? 40 days, something like this. And after she stepped down, the British pound seems to be on a high gear. Okay, and also it also mirror the dollar. The US dollar getting weaker, pound, euro are getting stronger. Okay, sorry. All right, and as you can see, momentum indicators, MACD, RSI, not bad. Okay, and we are expecting the comeback of 1.2 and level against the US dollar. Okay, and well, as you can see, if this downtrend has lasted for this is some kind of a technical analysis experience, as if the downtrend has been last for a long time, a break about this downtrend will not be short-lived. Okay, it will last for a while. Okay, so we also expect the rebound in currency, including euro and British pound, to last for a while. Okay, so you can think about what position you can take. And the next one, very important. This one, oil price. It will also relate to the CPI, inflation rate. Okay, you can see the momentum is very bad on the downside. Okay, and now we are expecting it will eventually get into the 60s. Okay, US 60s, 60 something US dollar. And for most part of the last year and this year, most part, the oil trade, I mean the oil sector, oil stock sector was very good. Okay, because oil price was not bad. And I remember for most of my webinars, whenever we talk about stock sectors, the oil sector should come at the top. Okay, for over a year's time. But now we are seeing that as oil price is turning down to the downside, oil stock sector could be well, their leadership in the stock market could be fading. Okay, for example, this one, Chevron, US oil giant, and you can see we say this is kind of a topping pattern. It is forming a top, something like this, and it has returned to the lower Bollinger Band. And also you can see the momentum indicators are pointing to the downside, downward momentum. Okay, now it just opened another page for our webinar today. Why? Because at this interesting time, when the market is starting quietly from a bear market into a bull market, okay, you like it. And the market leader, we say the market leaders will change. For the past 1.5 years, something like this, oil stocks were performing very well. I can say they were market leader. The oil stock sector was market leader. But as we are seeing the Fed showing signs of pivoting, reducing the rate hikes, and the stock sector and the technology stock sectors are coming back, we will see a rotation of leader. That is, oil stocks may be stepping down as leader, and other class of stocks will step up as leaders. So who will be the leader? And this is a $1 million question. Who will be the leader? And recently we are seeing that those stocks that was dampened heavily during the interest rate increase was the semiconductor sector. It performed very badly in those in the past 1 year or so. And recently we are seeing some signs that this semiconductor sector is well, getting some kind of life, breathing again. Okay, can I say that? Breathing again. This is NVIDIA, our leading semiconductor stock, and you can see moving average are well positioned here, and it keeps rebounding on the upside, and also and yeah, also the momentum indicators are good. Okay, oh good. And so I will maybe in the next webinar I will talk more about sectors, but I have brought out the point that when we are shifting from stock bear market to stock bull market, the leaders will rotate. Okay, and we are seeing that, and but it is not yet confirmed. Okay, we have to keep monitoring that. Maybe oil stocks are topping, and they will hand up their leadership to semiconductor or tech sector. Well, within the we are quite sure, in case the market keep on rebounding, the tech sector, technology stock sector will benefit the most. Why? Because it got damaged the most in the past year or so. And within the technology sectors, semiconductor could be the leader. Okay. Another very impressive, to me, very impressive semiconductor stock is called ON Semiconductor. Symbol is ON. Okay. Well, maybe you can tell me what good things it has. It has broken above a bearish channel. Okay, moving up again. Its technical configuration seems to be much better the Nvidia that we saw one slide ahead. Okay. Okay. So semiconductor sector, we have to monitor it closely. And also some other stocks that could benefit when we see the stock market rally, and are those stocks that were dampened heavily before, particularly those stocks that were dampened in those COVID-19 pandemic period. And the airline stock, not bad, we can see. Okay, it has just broken above a triangle. This is a triangle, consolidating triangle. And the American airline, AAL. Okay, we also have a Delta Airline, United Airline. Okay, so have a look at these stocks and monitoring them. Also, remember this one? It is one of the FANG stock, Netflix. Back in April, it dropped 31% in one day. There is a huge gap here. In one day, down 31%. Why? It reports fewer subscribers, something like this. But since then, it is coming back. It is coming back. Now, whenever there is a huge gap like this in technical analysis, we have to watch if the stock can recover this gap. If it gets back to 334, we can be quite confidently saying that it has recovered that gap, and it is a very bullish sign, because investors say, hey, that gap, we forget it. Okay, we move forward, something like this. Okay, so Netflix, we have to watch. And then another one, retail stocks. Retail stocks are quite tricky, and this one is a discounted retailer, Costco. I know most of you know that, and it is gaining momentum. This is the point I want to raise for today. It is a retail stock and gaining momentum, and it keeps trading on area close to the upper Bollinger Band. Do you still remember what are Bollinger Bands? This one, upper one, middle one is 20-day moving average, lower one is the lower Bollinger Band. Okay, Bollinger Bands, and in theory, I can say in theory, 95% of trading are taking place within the area between the upper and lower Bollinger Band. Okay, if it is close to the upper Bollinger Band, it means it is it is some mathematical terms, 2 standard deviation away from the 20-day moving average. Okay, it means investors are buying up these stocks. Okay, so also you can see the momentum is not bad. Okay, retail stock. Okay, so today we talk about retail stock, airline stock, and semiconductor stock. Okay, and also big tech stock, Netflix, and I hope that this will help you to put into your radar of searching for stock to look at in this turn of this very interesting point of market turning. Okay, and okay, the last point I want to raise, maybe you know it already, and this one, market shaker. Every time I would talk about that something we retail investors and we analysts has no say about it. It is the politics. Okay, politics. And now in China, interesting things are happening, because we can see that the COVID number in China is breaking record, about 40,000 cases in China per day, and it's quite huge. I don't know whether in Singapore it is 10,000 or something. In Hong Kong, we have about 8,000 per day now. But you know what? we do not treat it treat the COVID. I do not say not seriously. We just treat it like something. We know that it will be here with us for quite a while. So we are just not so nervous about that. And this one in China, we have to watch closely because the politics, the measures that the governments takes in China could impact the market. Okay, impact the stock market and also impact the oil market. Oil price could drop if the measures are much stricter. Okay, apart from that, one point I want to raise, apart from COVID, I want you also to notice, to study also the relationship between China and the US. Okay, I raise this point time and time again, and I have to raise it also today. And I can put it bluntly that the relationship between China and the US are in ice age, very bad. Okay, and if someone tells me that, hey, Ming, you know what, we are going to see a conflict between China and the US, hey, you know what, I will tell you, I will not be surprised. Okay, so watch closely, and I hope it will help your trading. So, ladies and gentlemen, the following I will open up to your questions. And mind you, one more time, and in December 15, Thursday, we will have another webinar like this. But maybe we will get into much deeper into stock sectors or some stocks you would like I talk about. So let Phillip Lover know what kind of assets you want to talk about, and I will talk about it. Okay, so for today, any questions?
Thank you so much, Ming Lam, for that insightful webinar. And members of the audience, you heard it right for the first time. Ming Lam is coming back on December 15 with another webinar. It is a market outlook webinar, so if you have questions or topics that you like Ming Lam to cover, be sure to add it in the survey form at the end of the webinar. And to sign up for the December 15 webinar, we'll provide a link in our follow-up email tomorrow. Or if you would like to sign up right away, I'll share the link to the webinars page, and then you can click on it and sign up right away. In the meantime, if you have questions based on what Ming Lam had shared today, or if there's anything else in the market related to what he covered today, you can send it directly through the question box. Okay, the question box can be found somewhere on the bottom area of your control panel. Just click on it and send your questions directly through that platform. In the meantime, we have a question from Juki. Juki
Yes.
is asking, with the impending hike in interest rates, will the USD move higher?
Will the US what? Move higher?
Will the US dollar move higher?
Well, good question. We can see that the US dollar, let me check. The US dollar has been up for a year or so, and as I point out, if a break happens to any trend, up or down trend, in this case a downtrend, if a break to the downside of this long-term uptrend, a breakdown like this, it will last for a while. Of course, as I mentioned, if this is the end of the bullish cycle of the US dollar, I don't think so, and I can tell you I don't know, because at the moment if you trade for the short term, you will see that the momentum is not there for the US dollar. Okay, of course, higher interest rate will support also the US dollar, but also we have to look at the chart and see what the market sentiment is at the moment, this moment now. Okay, and as I said, 5%, the Federal Reserve could match its interest rate to 5% or something like this. And I think if the market has already got this expectation, and they have already priced in that in the US dollar. Okay, so that is why I maintain that the short term is on the downside, But any other, there will be US dollar is very interesting. It could be also affected by other geopolitical situation. Just in case there is some conflict between big countries, well, we can assure that dollar could rise again, because in that case, we can see it as a safe haven asset. Okay, but meanwhile, for the short term, we are bearish. We hold a bearish view on this one, and that is why I also advise you to also look at what is happening around the world, particularly the interesting things, the interesting US-China relationship. Okay, it's a good question. Thank you.
Hey Ming, has the Hang Seng Index and Hang Seng Tech Index bottomed? This is from CJ asking that question.
Wait a moment. Yeah, Hang Seng Index. Sorry, is important?
No. Has the Hang Seng Index and Hang Seng Tech Index, have they both bottomed?
Let me say this. No. According to our observation, when the U.S. Stock markets rally recently, we do not see very how can we say, the correlationship between the Hong Kong stocks and US stocks are a lot like before. Well, 10 years, 20 years ago, Hong Kong stocks are following in US stocks. Okay, and now Hong Kong stocks, they are following China. Okay, so as this is a very tricky one. If you are bullish about the situation in China, so you can say maybe Hong Kong stocks, Hang Seng and Hang Seng Tech Index have bottom. But for me, not yet. I expect some more funny things in the future. So if you ask me which index to play, which stocks to play at the moment, I still advise US stocks. Okay, and but well, you know, things are developing everywhere, particularly in China, and we have to monitor closely.
Hey Ming, we have a question from James. He just wants your thoughts in general about US banks.
About what?
About US banks, like what kind of moves are we going to see them making in the near term and maybe mid term?
You mean US bank stocks, right?
Yes.
Oh, okay. And we can see, this is a good point, Sri. Maybe I will bring us some US bank stock next time. Well, I know we have also checked out some US bank stock, and also the US banking sectors, and they are doing also not bad at the moment. And rising interest rate, well, there is saying that we have rising interest rate, the bank should be doing well, bank stocks to be doing well, because the banks, they can charge higher interest and get the interest rate margin higher. But at the moment, we can see that also the bank stocks are also catching up, but the most exciting sector seems not to be in the bank stock. Seems not to be in the bank stock, and well, if you like to have a look at some bank stock, no problem. I can bring up some next time, but I can say the tech sector, which has been dampened heavily in the past year or so, could rebound. Could the strength of rebound should be higher than the strength of rebound of the banking stocks. Okay.
All right, thank you, Ming Lam. We have one more question from Yo Wei. Yo Wei
Yes.
is asking for the coming non-farm payrolls. Will we see how is it likely to impact gold?
How to what?
How do you think the non-farm payrolls, the upcoming non-farm payrolls, will be impacting the movement of gold?
Gold, right?
Yes,
You mean
gold.
okay. Okay, understood. So well we try not to play with with um, release of economic data because it is quite volatile during the day. You understand? When it release, when data is released, the price could be very volatile, up and down, up and down. But we are going to see we are going to focus on, you know what, not just gold, US dollar. In case the non-farm payroll number is not so good, the chance of the Federal Reserve to pivot to reduce the pace of rate hike will be higher, and of course, US dollar will weaken. Okay, and gold in that time will benefit and jump higher. But I have no idea. In fact, I'm not economist. I have no idea what the situation of the labor market in US. It seems the labor situation is still tight in the US. So the number could be good. We have been seeing a series for several months, a series of quite good non-farm payroll for quite well some months, and for the coming one, same. We have the same attitude that if it is good, if it's good news, it means the tight labor market. It is not so good news for the stock, and it will be good news for the US dollar. And you trade along with this line. That is along the line with the US dollar. Okay.
All right, thank you so much, Ming Lam. Looks like that's all the time we have for questions. If you have any other questions, you can send them in the survey form right after the webinar. More importantly, if there are topics that you'd like Ming Lam to cover when we meet again on 15th of December, please let us know via the survey form after the webinar, and we will have Ming Lam address it at his next session. Meantime, I hope you enjoyed today's session very much. We will send a follow-up email with details of the 15 December webinar in our follow-up email tomorrow. Meanwhile, take care and have wonderful trading for the rest of the week.
Thank you very much. Thank you.
Thank you, Ming Lam. Good night.
Thank you. See you.